I want to bring in Sam Vadas, Schwab Network contributor, to help set up the action today. All right, so the pressure is on, right? Yes. Futures this morning, and tariffs are top of mind once again. We knew August 1st was coming, and it is here in the can. It's not being kicked down the road in the sense that promises made, promises kept. This is one of the things that the Trump administration has said previously, and so they are enacting these sweeping duties.
They are, and now he's actually pushed out that August 7th deadline for more countries, where he's now come out with fresh tariff rates on particular countries where they hadn't really been able to negotiate, perhaps. So this is giving them a little bit more wiggle room. But certainly we are tracking the trade updates right now because of the fact that we have had this August 1st deadline, which of course is today, and then we had this sort of late night announcement by Trump yesterday. And you just take a look at the European equities and what we saw in Asian trade overnight, as well as to how global investors are feeling about this. I mean, the South Korean Kospi down over 3%. We've got the DAX down almost 2%. So not a lot of Friday cheer, you could say here, Diane, particularly if you're looking at the futures. Obviously, so many catalysts are moving parts for these markets right now with regards to the tariff rates, but also we have that all-important jobs report this morning. Not to mention, we are tracking those tech earnings, particularly given that investors aren't cheering everything about those, and I know you'll be digging into that throughout the course of the program. But, you know, certainly as far as what we got with Trump and these new tariff rates, because remembering we've got a fresh trading month, we've got fresh tariff rates, not so clear on how fresh we're feeling right now after the week that's been. But as I said, Switzerland looking at 39%, Canada 35%, India 25%, Vietnam and Thailand 20%. We know that Mexico's obviously got a bit of breathing room. Now also, of course, China. We're waiting for that August 12th deadline. We haven't heard whether that tariff truce will be extended once more. 40% on transshipped goods as well. So this has been a really big focal point too, because there has been some suggestions, certainly from trade analysts that I've been reading about, certainly who feel that maybe that might affect the trade negotiations between the US and China, because China could see that as basically trying to target them. As far as some of the transshipment is concerned. You know, I was having a chat with Steve Olson, who is a former trade negotiator for the US. He's saying, don't assume that this is the end of the story. More deals or further tariff hikes are almost certain. So it feels like, Diane, as we talk about this, it's just like we're in this cycle of perpetual uncertainty right now. The markets are taking it pretty well. I mean, the conversation as to, you know, how we've seen investors reacting to this, particularly since April, when you've seen this recovery in the S&P 500, that we've shifted from almost a story of resilience to maybe even complacency, because with some of these tariff rates not even being set in stone yet, we haven't actually seen the true impact of those duties.
And I think what it is now is that there is more clarity, right? Even though there is not, you know, complete certainty across the board, we do know levels for certain countries, right? Yeah. And you still have a trade framework or a truce in the case of China for certain countries, right? So that gives some clarity. And then at the same time, why there might not be as pressure is, one, earnings overall have been stronger than expected. So we're not seeing that hit to earnings that you might expect as it relates to, you know, some of the trade policy and pressure to growth that some had worried about. And then at the same time, when we look at some of the changes, the level has been pulled back on some Asian countries, you know, so it looks like there is some more wiggle room. To your point about that, there are more deals to come, right, and more negotiations happening. It's interesting to see who's getting the hammer approach when it comes to the levels.
Yeah, I mean, Switzerland and Canada, obviously a huge trading partner there. I mean, when you look at the biggest trading partners across the board, we know that China is sitting around 30%, and not to mention the tariffs that it had already been facing under the previous administration. But then you're talking about the EU and Japan, who seem to have settled on that 15% rate. But there is still seemingly a few cans being kicked down the road when you talk about, you know, for instance, Mexico, who got that extension seemingly on what Trump felt like were talks that had been going well, at least coming to the table. And, you know, maybe that was a different story for Canada as to why, you know, they're talking about 35%.
Let's talk about some of the earnings movers, because that's been a big focus and a part of why we've seen some momentum in the market and maybe not as much pressure. Apple shares higher in the pre-market.
Solid results from Apple, and really really thanks to obviously what we've seen with the revenue, the iPhone sales, and also in China, which has been a recovery story in itself. So we did see revenue growing 10% to $94 billion versus $89 billion, which is what the street was expecting. So a clear beat there, and actually that was the biggest revenue we've seen since December 2021. And noting about 1% of the growth was tied to a pull forward ahead of tariffs, so just about 1%. That's important to keep in mind. With regards to the iPhone sales, much stronger than had thought, 13% growth there, $44.6 billion versus the street's estimates of $40.3 billion. And China delivering $15.4 billion worth of that revenue. That was 4% growth after what had been a negative few quarters there. We've got to remember with China, obviously we've seen this with the story of Tesla as well, where these companies, these American corporates have had to slash prices because of the fact that they are competing with basically a race to the bottom with some of these products over in China, and there has been some concerns around chipping away at their premium and also certainly as far as margins are concerned, but encouraging guidance to expecting the mid to high single-digit increases in revenue, services growth to be similar to this quarter's 13%, which is also a standout. And then also with regards to the tariff-related cost or the hit to what they've seen here, $800 million in tariff costs, they're saying, but is the caveat, $900 million is what they had been previously estimating. So that was lower. And then for the September quarter, seemingly a little bit encouraging, assuming no changes. You've got to remember that, obviously nothing sort of shifts in the sort of political landscape we're seeing here. They're talking about incurring a $1.1 billion hit in tariff costs. But the elephant in the room, and those were Dan Ives' words, and this is something that a lot of people were focusing on because they've been sort of seen as behind the eight ball in this, is artificial intelligence. And they hinted at M&A, which is really interesting that, maybe this is not going to be something that they are going to focus on alone. They're actually going to have to, bring someone in as far as some of those investments are concerned.
Like what Meta did with an acqui-hire, basically, with that acquisition that they did recently. That was essentially just to bring in talent for AI. I'm seeing some analyst activity with regard to Apple, B of A raising their price target to 240, maintaining a buy. Morgan Stanley, they are overweight, sticking with overweight, raising their price target to 240. Before we lose you, Sam, we've got the jobs report coming up. Talk to us about what you're seeing as the setup going into it.
So the setup as far as the markets are concerned, we've seen these yields ticking higher, not so much, but obviously the July period was sort of a story of recovery for the dollar somewhat. So we have certainly been keeping tabs on that ahead of that. But, we do expect to see a bit of a softening in certainly the jobs number as far as the NFP is concerned, unemployment to also creep up. Obviously, the big question is going to be, how the Fed looks at this piece of data, given that Powell was, so clear this week that, he wasn't going to entertain a September rate cut. He didn't say no cut in September, but they are going to be just so data dependent. And so that is what makes these economic prints just so much more critical and important as we lead up to that September meeting.
Okay, the expectation for 106,000 jobs for the most recent payrolls report. We'll see if the numbers line up, especially given how ADP performed earlier this week. Thank you, Sam. That's Sam Vadas, Schwab Network contributor, with the latest look across macro from tariffs to jobs and earnings as well.